Hey everybody, Rich Munroe with BNB Investing Group on our Facebook Live this week. Thanks for jumping on. Just as a reminder, BNB Investing Group is a newly formed group that helps investors and operators that are either buying properties to do short-term rentals, managing other investors' properties, or doing the master lease rental arbitrage strategy. And so we've been looking at a lot of different solutions, BNB Investing Group, to kind of help us grow our business and scale our business. And pretty excited today. I've got my good friend Keith here from Nectar, and these guys are definitely kind of making some moves in the short-term rental space. They're doing financing uniquely, strategically for folks that are growing their short-term rental business. And I thought it would be good to introduce them to the group. And we are going to have some time for some questions towards the end as usual. So if you have any questions as we're kind of walking through this, feel free to put it out in the comment section. For those of you just jumping on, if you could just give me a quick, you can hear me okay, give me a quick yes in the comments just to make sure that our audio is working good. And so with that, Keith, take it away. Give us an introduction about yourself and about Nectar, and we'll jump right in.
All right. Thank you, Rich. So welcome, everybody. My name's Keith with Nectar. A little bit of background about just me personally. I was a loan officer and branch manager for 13 years, so I do have a lot of financial experience. And I've joined Nectar, who is about a 2-year-old company in the fintech startup world. And how we started, our founders, Derek and Brittany, who are real estate entrepreneurs from a very young age. Even during their college days, they were buying houses. So they've accumulated upwards of 4,000 doors under their belt, everything from fix and flips to multifamily, Airbnb, superhost. And their most biggest frustration was getting access to capital without having to give up an arm and a leg. You know, equity partners or maybe people you know in those circles that could lend private money. So that's how Nectar was born. But Nectar is very unique. We're not like a traditional lender, and we're not going to compete with them. We actually can work in connection with your mortgage company, especially on acquisitions. So what Nectar really focuses on is going to be cash flow. Cash flow is king around here. So we're not going to look at tax returns. We're not going to look at even a credit score. We don't even ask you for your social. But what we're going to want to do is look over your entire portfolio or the ones you want to acquire. And we'll focus on a 12-month trailing profit and loss statement to find out what your stabilized net cash flow is. And then based upon that cash flow, you have the option to assign to Nectar a portion of that cash flow for our 1 to 5 year term. And then in exchange for that cash flow, we give you the capital you want and need in an upfront lump sum advance. And you guys can really spend that money however you choose. A lot of people are using it for their renovation projects, or if you're a short-term operator and want to furnish that next property, even arbitrage. And we even can be used as part of the down payment or even for the capital stack for acquisitions. We have another very unique product called Pref Equity, where for those of you who have an LLC, which is required, we'll get to more of that here in a second. You actually can name Nectar as an equity member, preferred member, which will allow you to get around the source and seasoning rules, which you probably already know about for traditional lenders, which allows you to add an equity partner, not a debtor, to use our funds for your down payment. So a lot of creative options that we can help you grow your business and acquire more properties. We also do it with very minimal documentation compared to a lot of lenders. So we can close in 5 to 7 business days on your first transaction and 2 to 3 days on future deals. So our whole goal here is to really help you grow and to utilize a lender that's not securitized. We're not going to put a lien on your property, and we're not even going to put a trade line on your credit report. So there's no debt ratio implications. So we're really flexible. And the great thing is, as you grow, we want to see that growth because you're adding cash flow. Well, guess what? You can come back to Nectar again for future deals like a lot of our clients do. And there's never any closing costs or points either. So quick access to capital, very fast. And we lend in a way that's really new to the market, and it's growing by leaps and bounds. And that's why we're talking with Rich here as well. And Rich and I had a conversation about a month or two ago on his personal portfolio and also his clients he works with. And he even met the founders of our company a couple of years ago. So his roots run deep with us. So we're happy to be on and help out and answer any questions you guys have.
Awesome. That sounds great, Keith. I appreciate it. And so just to kind of walk us through an example, let's say I have 10 listings to keep the numbers easy. And I've had those 10 listings now for about a year. And so I've got a historical cash flow track record on those 10 units. Let's say, again, to keep the numbers simple, that my net after all my expenses is around $1,000 per unit. And so, that's a $10,000 per month cash flow. So using that example, how would you guys kind of view that portfolio?
Absolutely. That's nice, easy round numbers to figure out. But let me take a real quick step back. I think I missed it earlier, just to see what our ideal client is, so everyone knows what it takes to qualify. Then we'll get to your question there, Rich. So we want to see someone that has a couple years of experience, ideally 3, but we will look at the up-and-comers as well. But you do have to have an entity structured like an LLC, and you have to have your banking structured in a way that your business flows through the banking account. We really don't want to see where you're mixing your personal banking with your business, because after all, Nectar is a business loan. So you guys have to operate like a business to have access to our funds. And if you're not there yet, trust me, it happens. We could absolutely coach you up along the way, because we want to see you through for the long haul, not just a short relationship. But to get back to your question, very simple. So let's say you had that $10,000 a month of net cash flow. That's after expenses and after debt service. But we will add back things into your P&L like CapEx expenses, those one-time events that are not stabilized, and we'll work with you to get to that final number. So you're allowed to assign up to 65% of your cash flow over to Nectar. So that's a max. Any amount less than, of course, fully flexible and customizing your quote. So for that $10,000 example, you'd have a $6,500 a month payment on a 5-year term. That would get you in your account between $220,000 and $230,000 deposited. And then you could use that money however you want. Also, let's say you did have $230,000 available, but you only want to use $50,000 today. Go tackle that project. There's nothing stopping you from coming back to us in 6 months, 6 weeks, or even a year later on to access more of that capital you have available to get up to your ceiling. Then the exciting part is, let's say you added another door to your portfolio that's cash flowing. That's the whole goal, right? You could then have your ceiling increase as well. So we could really be that long-term partner for you. But of course, that's a max equation. I'll show you a little bit of a behind the scenes, simple little math equation. Whatever number you guys have in your head as far as your portfolio, whether it's $10,000 a month or $1,000 a month, to get your max quote, a rough ballpark, take your net cash flow, multiply it by 22. Simple as that. That gets you your total max cash flow on a 5-year term, because that's what everyone wants to know. Then we could always adjust the numbers back. So back to that example, Rich, $10,000 times 22 is $220,000. I told you 220, 230 keeps you right in that ballpark. Hopefully that makes sense.
Definitely makes sense. And then the obvious next question is what is that funding going to cost me from an interest rate perspective or a percentage on that 220?
Absolutely. And to be clear, Nectar is not classified or regulated as a loan, because we're not. We're a cash flow assignment agreement. So we don't quote an interest rate or APR, but what we do have is an annualized finance fee. Very similar. Our finance fees typically range between 12 and 15%. Sometimes it could be 16 if you happen to have a riskier portfolio. Lots of times that's like a rental arbitrager, or maybe someone that doesn't have the full 3 years of experience, kind of an up-and-comer. But you also have to understand that you have a buyback schedule too. So I'm sure a lot of you are thinking, okay, what does it cost to pay it off early? We don't have a payoff because we're not a loan. There's no balance. You could buy back your cash flow after a 3-month lockout period. And we always shoot for truth and transparency always. So we'll actually give you a copy of your buyback schedule, so you know month by month by month what it would take to buy out of our agreement. Fully disclosed to you from the start.
But it's the total cost. And so if I go the full 5 years in repayment, the total cost is going to be anywhere in that 12 to 15% range. Is that what you?
That is correct.
Okay.
Yeah, and there are no balloon payments at the end. So it's a simple amortization. You make the payment for 1 to 5 years, and after that, we go away. Once we go away, guess what? You have more money available in your account, let's call it, so you can come back to us at any time to access further funds. Really, it can hit the gas pedal on your acquisitions and growth. That's the whole goal here.
Right, of course. And so let's say I'm able to, or I would want to pay back or buy back the equity, as you put it, after 12 months. Am I kind of penalized for paying it back within a year instead of the full 5 years?
There is a buyback schedule that will show every detail. So now we don't charge a traditional prepayment penalty like you may see with a lot of hard money lenders. But what I don't want to set up any client of ours is to take a 5-year advance and fully expect to pay it off in 12 months without having some type of fees built in. Because as most loans are, or advances, it is front loaded. As you get towards more of the seasoning of that account or that term, past the halfway point, you could buy it back at a discount. But if you do pay it off in the first 6 to 12 months, there is going to be a finance fee built in there because it is front loaded. Again, it's much easier to show it to you than to explain it, because us being so new, there's not a simple mortgage calculator that I have, and being an ex-mortgage guy, I could whip that out and give you any number you wanted. But everything's proprietary, and through our modeling, those are actually created by our underwriter and are unique for every specific portfolio, because everyone operates their business differently.
That's understandable. So there's a little bit of minutia in calculating what that is, but there is some sort of a kind of a prepayment penalty that you would have to pay if you wanted to pay early.
Yeah, I would say it's similar to, like, we are front loading some of the finance fees, just like a 30-year fix would. You pay all your interest up front. So when you talk about that with me, if you really want to pay it off early, just have that open discussion with us. We can custom tweak the quote for you. It's been pretty rare, though, because most of our terms do go past the first year. But once you get past the first year, it goes downward scale. So it is going down in your favor. But as I say, I always appreciate full, honest discussions. After all, this is a business transaction. No one's feelings are going to get hurt. There's a tough question, just ask.
No, that makes sense. And then so you touched on this briefly, but just to expand, so that is 65% of my net cash flow. But if I only needed like half of that, let's say I just needed 110,000 instead of 220, then you could basically do the same structure. It'll just be for the 110 instead of the full amount.
Yeah. So in that $1,000 available, you may say, great, I don't need it all right now. I only need $100,000. We would then just backward engineer the numbers to get you to what you want. Or other people will say, oh, great, I love to have the fact that I can get 220, that payment's too high. What can I get for $2,000 a month or $3,000 a month? And I'll churn that number out for you as well. So everything is very customizable with Nectar. We're definitely not a square peg in a square hole like that brick and mortar bank around the corner. We have a very humanistic approach to underwriting. Our founders are still involved in day-to-day discussions. So we'll take on any creative situation to make it happen. And that's my job as the originator. I'm here to fight for my clients' benefit. So I go to battle with my underwriters all day long about why my clients need the money, need the help. And if there's a will, there's a way, put it that way.
Okay. All right. And then, so as far as minimal qualifications, so I have to be preferably up and running for at least a minimum of 3 years. Is that correct?
3 years is the goal, but once you have 12 months on a P&L, it's definitely open for the discussion. It's really difficult for the people that have, a brand new portfolio that just got 2 doors open and they have 6 months on it. Then it's tough. But now let's say you do have the experience minimum, you have your entity, you have your banking structure correctly, and you want to buy your next property. We can also look at pro forma as well. Really good in the short-term space because we have historical trends. There's AirDNA out there. There's even appraisals nowadays that can give rental calculations. So we want to give you every credit we can to boost that dollar amount up, which really is good for further growing your portfolio with acquisitions.
All right. And how are you qualifying the cash flow? So for example, we've got multiple platforms besides Airbnb that we list our properties on, right? So we tend to keep things clean. We tend to still use the same business account from a legal entity standpoint. And it doesn't matter if it's an Airbnb listing or direct booking or VRBO, I'm still having those funds filter into that one main business account. And so are you using as your kind of underwriting, you looking at what comes in and out of that main business account, or are you just looking at the high level financials, or how are you qualifying that?
Good question. So it is both. So we're going to look at the P&L, but after all, you guys all know a P&L is self-reported, right? So we will link up your bank account through Plaid. And then as long as the revenues and expenses kind of flow closely to what the P&L shows, it's never going to be perfect. We know that. That's how we use our underwriting due diligence to see that it's pretty close. If for some reason we can't connect Plaid because some banks are just not acceptable to it, then we'll look at a 12 months bank statement. It's kind of like a bank statement loan, if you will. And then we'll go through there. We'll identify what the CapEx are. Hopefully your P&L is clean and how you categorize things so we could take those out. If it gets down to the nitty gritty, we can't even hop on a Zoom call with our underwriter to go through it, which we have done when people have tricky situations. We've seen them all.
All right. And then, so as far as the monthly payment goes, I know that there are some, bank statement loan products out there that are kind of out in the marketplace, and they typically want to attach to the account and have the payment come out via ACH payment, basically automatically deducted from the business checking account. Is that the same structure you guys use as well?
That is the same structure. We are a little flexible with the payment date you choose, but typically it's the 21st for our accounting side, but it is an ACH draft. So we're going to underwrite it, the loan or the advance to the business bank account. That's how you qualify. That's the same account we deposit the money and we also withdraw the money from.
And it's done on a monthly basis?
Correct.
Okay. All right, cool. So those of you that have just jumped on, if you have any questions for Keith regarding the summary of the opportunity here, feel free to throw it in the comments section and we'll try to get to any questions that you guys might have. And so I'm also going to put in the comment section if you want to have more details and schedule some time with Keith to talk about your particular situation. Click on that link. There's a form there for you to fill out with your name and contact info. And you'll also get kind of some preferred treatment if you use that link, such that you might be able to defer some of the beginning payments and things of that nature. So for any of you that are interested to kind of do a deeper dive and take a look, I know there's a lot of folks in BNB Investing Group that are fairly new and aspiring and starting their business. But we also have a lot of experienced members in our group as well that are like myself, that have been doing this for over 3 years and have multiple listings. And so if you're kind of at that level and are ready to kind of, have some opportunities in front of you that allow you that flexibility, throughout our career, we've always had our landlord investor owners come to us occasionally and present us with other opportunities, whether it's a master lease or if we're doing acquisitions. And so this product, to have it, even if you don't have a need right now, but to be knowledgeable of this option and have it in your toolbox, I think is huge, because you don't have to go through a bunch of hoops and do a loan application and make sure that your FICO's in line with, as real estate investors, we all know that we're teetering back and forth with our FICOs. And so, if you're presented, like we've had an opportunity to, activate 20 one-bedroom units with one of our investor partners, and to be able to fund 20 units and get those set up, you guys all know what that cost. And so, to be able to have the flexibility to pull down some cash by tapping into your monthly cash flow, I think is a good option. And so, Keith, if I'm leaving anything out there, you want to add to that, or if you want to explain a little bit more about the link as well?
Sure. Well, something I want to cover. So make sure that you guys understand, we're not just about short-term rental properties. That's kind of how we cut our teeth. But you may be a long-term rental operator and have properties you've had for 5-6 years. They may not be generating a lot of cash flow, but we definitely want to keep them as part of the equation, and that may get you past the experience hurdle. But we also will look at midterms. We'll look at multifamilies, even some hotels if you have partners for those. As long as the asset is backed by real estate, it really is open for discussion. So definitely keep that in mind. But yeah, so we have the link set up through Rich. We want to make sure that everyone gets the attention they deserve. And you're going to be speaking with me typically for these calls. And I always try to educate as much as possible. As I understand, we're not the brick and mortar mortgage off the shelf from Fannie and Freddie. We are a little unique, but I do have I do have a brochure I could share with Rich. You could pass out as well, make it available for you guys. You always can check out the website through the link as well. So there are no tough questions that will go unanswered. Feel free to reach out for any questions you have, and I'll be happy to help.
All right. And Keith, you guys are operating nationwide right now, or are there any states that you're not operating in?
So we are in all 50 states. One of the other requirements for qualification is that it does have to be a U.S.-backed property and U.S.-based entity. But that's not to say you can't take the cash flow from your properties here in the States, get the advance you need, and go buy a property in any country you want. So we don't limit where you spend the money. As long as it's going towards growing your portfolio, you have our free will, or you have free will to use the money as you choose. But we're not international yet. We're too busy right now as it is just in the States.
Got it. And so just for clarification purposes, because I know we do have some members that are based in Puerto Rico that have large portfolios, and Hawaii. So those are included as part of the 50 state umbrella. Okay.
We have several quality in Puerto Rico, actually. They're a booming market down there as well for vacations. They don't have the same lending options that we have here in the States. So I welcome those with open arms.
Perfect. Yeah. So I've got some partners down there that definitely may be interested to link up with what you guys have to offer, for sure. So how long have you guys been at this?
So Nectar's been around for just over 2 years. And myself, I've been with the company for only about 6-7 months right now as the main originator. A lot of it was a lot of technology to get started, raising our own capital. Speaking of which, Nectar does have its own $25 million credit facility. So we have plenty of money to advance and put out there into circulation. But we also have our own personal Nectar money. So when it comes down to tricky scenarios, we actually can lend our own funds and make those deals happen. So I do want to hear about those unique situations. But as far as growth goes, we're getting the name out there quite heavily, just like webinars like this. We do them quite frequently as well. A lot of it's education based. We're getting a lot of podcasts out there. If you guys want to Google Derek Barker on YouTube or one of the other podcasts, they're out there in force. We've even got a lot of mentions on Bigger Pockets, quite a few mentions on various podcasts that we've never even talked to. So we really want to capitalize on market share since we are the first player to this space, and hopefully make Nectar a household name. So we're going up, not down, and we have won some awards to prove it. The market has come and responded pretty favorably to us.
All right. And so we've touched on folks that are acquiring real estate, buying real estate to do either long-term, midterm, or short-term rentals. That's a good point you added there. We've also talked about the rental arbitrage folks that are doing master leases. What about folks that are managing, or part of their business or all of their business is focused on managing properties for other investors as a short-term rental business?
Yes, 100%. We fully do encourage property management companies to inquire as well, because a lot of our investors will have 1 or 2 properties they own. They manage a couple, their friends start hearing about it, wanting them to manage their own. Next thing you know, they have a little booming business there. So property management is fully encouraged. We're even working on right now. I have a $1.3 million acquisition of a fairly large portfolio of one property management company buying another. So same story, 12-month trailing P&L, broken down monthly, include debt service, which you may or may not have in that scenario. And we can absolutely use that to go buy other properties, add technology, hire staff, or acquire other portfolios. So that's definitely part of the game.
So a lot of us, like myself, we do all three. And, so acquisitions, master lease, and manage properties. So I may have multiple legal entities, multiple business accounts set up. Let's say I wanted to raise a bunch of cash quickly. Am I able to just basically show you 3 different business checking accounts with 3 different structures, as long as it's all kind of got that history and the track record that we talked about?
Yes. So we're always going to start looking at the total portfolio, but it is also, you are able to separate your entities. So let's say you did have entity A, B, and C, right? Your ownership, your management, maybe some arbitrage there. but part of your ownership may have some properties that are in rehab mode. So they're not generating cash flow. So it's not a really good fit for that type. Let's leverage one of the other entities for the cash flow, get the advance, then you can spend that money across your whole entire portfolio mix however you want. Same thing going for a lot of operators who will basically have one property per LLC. Let's take the money and advance it or leverage the cash flow from entity A to go fund the renovations for entity B and get that one live. Then once that one's live, you could then use the cash flow that you've grown your ceiling to go acquire another property. So it really can be a rinse repeat model, because if you're taking our funds to acquire cash flowing properties, you really are using that cash flow to pay back Nectar. Now there's more money on the table. What do you want to do next?
No, definitely it makes sense. Definitely makes sense. It gives you that flexibility no matter which way you want to grow. So I like that. I like that ability, certainly. So, let's talk about, like, I may not be, 50, 70, 80 properties, but maybe I have one or two. But I've got, 2-3 years track record. If I've just got one or two properties, is that something that I can still look at as an option?
Yes, you absolutely can. One of the numbers I haven't mentioned, so thanks for asking this question, it's jogged my memory. So once your portfolio is generating right around $1,500 a month of net cash flow, then you really get into the discussion of us being able to help you out. Our minimum advance is at $30,000. So that's kind of the starting point. So it may just be one property you have in a good vacation area that's generating the cash flow. And don't be afraid if it's also seasonal income as well, because since we're so heavily involved in the short-term rental market and no seasonality is a real thing, we even have repayment plans where you could pay more of the full payment in the busy season when cash flow is coming in, and then revert down to a lower interest-only payment during your off season to really help out those people that have high seasonality.
Okay, got it. Very cool. All right, and so I'm not seeing any questions in the comment section, and we're starting to run out of time. So if you do have any last minute questions, feel free to throw that out there. Keith, any last things you'd like to cover before we shut it down?
Well, I just want to say everyone out there came into this business with a mindset to grow. Nectar can be one of those creative financing options that can unlock doors you probably haven't even thought of yet. So when you have cash flow that's generating and you need capital, because obviously this is a capital intensive industry, we fully want to be that long-term partner with you. We absolutely have about a 65 to 70% repeat client rate. So when you have the knowledge built up to acquire cash flow generating properties or taking them more upmarket to get a higher daily rent, that's when Nectar can really be a key to fueling your growth. So we're not here to just do one deal. We want to see repeat clients that grow with us. And we have many success stories. I'll share one real briefly with you. I have a gentleman out in Columbus, Ohio, came to us just on a Google search. He has a pretty good portfolio, 7 doors, not huge. He took an advance for $100,000 and was able to acquire 4 more doors. Got so excited, he took another $100,000 advance plus some pro forma on the new properties, acquired 4 more doors. Then he explained it all to his mastermind group, who he's a part of, just like this group. And we did a webinar to his students, and 2 more of them took advances to take on more doors. So it can really be exciting once you figure out how to make it work. But everything always starts off with cash flow. Let's talk about that P&L, see what your cash flow is. Let us get you a quote, typically 24 hours for a quote. And if you don't take that advance today, at least you're going to have us as an ace in your back pocket. That's the best way to grow your business. Educate yourself, because there's options out there and we're a new one to the field, but we want to be a big one and help you guys grow.
That's awesome, Keith. I really appreciate the time you spent with us today. Definitely look forward to working with you guys going forward. And so this is BNB Investing Group, like we've talked about. If you guys have an interest in some of our programs where we're helping new investors learn the short-term rental business, feel free to reach out directly to me via Messenger on Facebook. And then we are also continuing to do these weekly Facebook Lives. So we'll see you again next Thursday. And Keith, look forward to seeing you sometime soon, maybe at one of the upcoming conferences.
Sounds like a plan, Rich. And hey, guys, don't be a stranger. We're always here to help.
Sounds great. Thanks a lot, Keith. You have a good one. Thanks, everybody.